All right, let's talk about the future. By 2026, the mortgage industry is going to look, well, pretty divided. You'll have the brokerages that are absolutely thriving, and then you'll have everyone else just trying to keep their heads above water. And the difference? It's going to come down to one single critical factor: their digital infrastructure. So today, we're going to roll up our sleeves and actually architect what that future digital brokerage looks like.
So, let's start with a scene that I'm sure is painfully familiar to a lot of you. I want you to picture it. It is way too late at night, you're hunched over your screen, your eyes are burning from scanning just endless PDFs. And what are you looking for? You're hunting for one tiny, tiny human error. A single missing zero that could completely derail a family's dream of owning a home. I mean, talk about pressure. This isn't just inefficient, right? It's an incredibly high-stakes, high-stress way to live and work.
And that right there, that whole scenario brings us to the absolute core of the problem we're digging into today. We call it the manual labor trap. And really, it's this vicious cycle of inefficiency and stress that has, honestly, defined the mortgage industry for way too long.
Think about what this means for growth. The old way of thinking was super simple, right? More loans, just hire more people. But if your only way to grow is by throwing more bodies to the furnace, you're not actually building a scalable business. Now, you're just managing a giant bottleneck. See? Every single new customer brings more overhead, more complexity, and a bigger risk of error. And in the world of 2026, that's a fatal business model. Okay, so the big question is, how do you actually break free from that trap? Well, it's not about working harder. It requires a complete fundamental shift in how you think. It's about moving away from manual labor and building on a solid foundation of automation. Let's really get into how this creates a totally new kind of business.
And this is key. We have to stop thinking about automation as just, another piece of software you buy. It's not a tool. It's your digital infrastructure. The best way to think about it is like having this invisible team of digital workers on your staff. And this team, they work 24/7. They never miss a decimal point, they never need a coffee break, and they never, ever make a careless mistake.
Here's a great way to think about it. It's like the plumbing in a massive skyscraper. You never actually see the pipes, do you? But without them, that entire building is completely useless. It's uninhabitable. And that is exactly what automation becomes for a modern brokerage. It's that essential, invisible system that makes the whole operation work and makes it powerful. Okay, to really get a feel for the impact here, let's paint a picture. Let's compare two completely different worlds. We're going to look at the day-to-day life of a broker in the old way versus this new automated era. So, over on the left, we've got what we call the friction era. You know this world. A borrower emails you a blurry photo of a pay stub. So, you have to download it, rename the file something sensible, upload it to your system, and then manually punch in all the numbers. Then, of course, you spot a problem. So you have to draft an email, send it back, and you wait. Now look at the right. This is the agentic era. Here, your AI agents are on the job. The borrower uploads that same blurry photo. Instantly, an AI extracts the data, flags the exact same discrepancy, and automatically pings the borrower asking for a clarification. And all of this happens before you've even finished your first cup of coffee. It's a night and day difference. And the result of that shift from left to right, it's not just a small tweak. We are talking about a massive 50 to 67% drop in the time it takes to get documents processed. This isn't some minor improvement, folks. This is a complete and total transformation of your workflow. Okay, but look, this isn't just theory. This isn't some hypothetical. Let's dive into a real-world case study and see the actual proof of how this transformation plays out.
So let's talk about a company called Strategic Lending Group, or SLG. Back in 2025, these guys were drowning. They were completely stuck in that manual labor trap we talked about. They had a team of 15 people who were just struggling to push 80 loans a month out the door. Their cost for each loan was a staggering $500, and their average closing time, over a month. Not good.
So, what did they do? They implemented what's called a 3-layered automation stack. It sounds complicated, but it's pretty simple. First, they set up an AI intake agent. Its job was just to qualify new leads and grab all those initial docs. Second, a logic layer. This thing helped with underwriting by automatically cross-referencing all the financial data. And third, a nudge engine. Basically, it just automatically followed up with people about any missing items. No more chasing.
And the financial impact? I mean, it was just staggering.
The company's cost per loan didn't just go down a little bit, it completely collapsed. It went from $500 all the way down to just $200. That's what happens when you systematically remove all that manual friction from the process.
Okay, what about their capacity? Get this, they went from processing 80 loans a month to 150. That is almost double the volume, and they did it without hiring a single new employee. They didn't just add more bodies to the furnace. No, they completely re-architected the furnace itself.
But you know what? For me, the absolute best result from all of this was the human one. Their senior staff, they reported a massive jump in just being happy at their jobs. And why? Because all that tedious, mind-numbing work of just moving data from one place to another was gone. The automation handled it. It freed them up to use their actual expertise on the really complex parts of the loan. You know, the puzzles that actually require a sharp human brain.
So that case study is amazing. It shows us what happened. But now let's break down why this works so well. The return you get on this kind of investment, it's really built on 3 core pillars.
All right, so those 3 pillars are 1. Error reduction, which is basically your compliance shield. 2. Scalability, which gives you what we call infinite elasticity. And 3. Human creative freedom, which acts as a relationship multiplier. Let's just quickly touch on each one.
First up, the compliance shield. Look, we're moving into an era of real-time supervision. That means regulators can basically audit you at the drop of a hat. In that world, an automated system is your absolute best defense. Why? Because it creates a perfect, unchangeable audit trail of everything that happened. A human being, might get tired and skip a check on a Friday afternoon. The system, it never does.
Pillar number 2 is infinite elasticity. We all know the mortgage market is volatile. It's crazy. When interest rates drop, the phone just explodes with calls. An old-school manual brokerage, there's just no way they can hire and train people fast enough to handle that surge. But your digital staff, they can scale up instantly. They can handle 1,000 leads with the exact same efficiency as they handle 10. No questions asked.
And finally, we have the relationship multiplier. And honestly, this one is the real heart of the whole philosophy. Automation is not here to replace the broker. It's here to unburden the broker. When you're not stuck doing mind-numbing data entry, you can finally focus on what really matters. Building strong relationships with realtors, advising clients on those really tough files, the high-value work that actually grows your business.
So when you put all of this together, it really leads to a fundamental choice for every single person in the mortgage industry. And there is no middle ground here. You're either on one side of this line or you're on the other.
So the question for you is pretty simple. In this very near future, in the 2026 mortgage landscape, are you going to be the one proactively designing and building your own systems? Are you going to be the architect?
Or will you be a victim of your own manual debt? That's that ever-growing cost of inefficiency, the constant risk of errors, and all those missed opportunities that just pile up when you cling to the old way of doing things. The choice really is yours.